My name is Cary Stamp with Cary Stamp & Company. This is a Principled Wealth Moment. I'd like to explain for a moment why it's important that we look at what's going on in other parts of the world to determine the direction of the U.S. economy. We're an interdependent world. In fact, 40% of our total global trade happens with just 3 countries: Canada, Mexico, and China. And China is extremely important to the United States from an economic standpoint. Why? Because China was the largest source of imported goods to the United States. In 2020, we imported almost $435 billion worth of goods from China. However, as far as exports go, China is our number 3 market. We're their number 1 market, but they are our number 3 market after Canada and Mexico. So what happens when China catches a cold and their economy doesn't continue to grow? You see, the Chinese economy has been expanding at a fairly rapid rate over the last 20 years. Sometimes double-digit growth in any given years, but usually it's in the high single-digit rate, year in and year out, and year in and year out. Whether you can trust the numbers or not, that's a totally different discussion. However, on August 15th, the Chinese government cut their interest rates. Why? Because they saw a decrease and a slowdown in economic activity. In fact, for the prior quarter, the growth rate came in below 4%, which in the history of China in the last 20 years is a pretty low number. Also, China continues to have a zero COVID policy. So if they find outbreaks of COVID in a particular area, they lock the area down, which decreases economic activity in those areas. So they're seeing low rates of production in their factories. They're seeing low rates of sales growth internally to their retail sales. And they're also seeing a low rate of economic growth all across the country. In fact, one statistic that stood out to me was that almost 20%, 19.9% of the youth in China are currently unemployed. Think about that for a moment. Almost 20% of Chinese youth are currently unemployed. There's another way this is manifesting itself. About a year ago, there was a threat of default with a very large Chinese property developer. Those threats we're probably going to see crop up again. Why? Because in China, it's very common for you to start a mortgage on a property that you're going to buy before that property is even completed. And there are over 100 large property developments in China that are still in some phase of construction that are moving very slowly, where the property owners whose mortgages have already started are now deciding that they're going to boycott paying their mortgage because it's taken so long for the construction. This could have some ramifications for the property market in China, and you need to watch this closely. If China gets a bad cold, it increases the global risk for both the United States and the rest of the Chinese trading partners, and could have ramifications on what's going on in our economy as well. So watch China very closely, watch what happens, because it will impact all of us. My name is Cary Stamp, and this has been a Principled Wealth Moment.